Alright, welcome to week 3 of Teach the Teacher, and this time we are going about financial analysis and the different types of it. First, we discuss the content for this week. This week we are going to talk about the definition, the sentiment analysis, the technical analysis, the fundamental analysis, and how this will contribute each other into making informed decisions, and then how they interact with each other. First, the definition. The definition of financial analysis refers to the assessment of viability, stability, and profitability of a business, sub-business, or project, in which professionals prepare a report using ratios and other techniques that makes use of information taken for a variety of sources in order to make, in the end, a better informed decision about a financial instrument. Could be stock, crypto, bond, or something else. First, we're going to talk about the sentiment analysis, which first is a sort of an analysis to get the sentiment or the mood of a market towards a specific financial instrument. This mostly contains data sources such as uh, uh, papers, social media, and basically any news related um, source which could have influence over the instrument. The purpose of it is to see if the mood of a different stock or the sentiment towards it is bullish in rise or bearish, and that is on the low end. So you can sell or buy a stock before it breaks trend, for example. Then we have the technical analysis. The technical analysis studies the historical price and look at to predict the price of a stock, but also to see constant themes in a chart, for example, in order to predict if it's going to break a trend, to be bullish or bearish. There are different tools and data sources for it, such as a chart, the RSI, the moving average, and those kinds of data tools. The purpose to actively predict in the end a breaking of a trend in order to uh, sort of buy or sell before that point. But this time more the focus towards the how would you say that, based on the historical data and based on trends you see in chart, for example. Then we have the fundamental analysis. Fundamental analysis is primarily, you could say, the analysis of a company to basically assess the intrinsic value of a stock and to see if it's overvalued or undervalued, and based on that you could make a decision. Most data you're going to find for this are primarily found in a company or a business, based in financial sources, financial statement, earning report, balance sheet, so on and so on. The purpose of this is to determine if an asset is, as I told already, overvalued or undervalued. And you can also use this kind of data to assess if the company's health is all right. Let's see on which time we are. We are still in the clip. How each method contributes to an informed decision. In order to make a good decision to sell a stock or not, we have to look at different analysis, where the sentiment analysis plays really into the public sentiment, and because people buy stocks, you want to know how public sentiment is towards a specific company. So, for example, take big pharma, for example. You could argue that maybe because of they are known for like uh, asking really high price for specific medicine that could downsize the public sentiment, um, because they make a lot of money off of people's health. But on the other hand, if there is a breakthrough in research recording a new medicine for a cancer, the public sentiment could raise, and which could result in also the raise of price of that specific stock of the company. For technical analysis, you could look at price charts, in which case you could argue that if um, we take the example of support and balances, if you see recurring theme that a company multiple falls to like a point of $50 and then rise again and then falls again to $50, you could take the $50 as a support. But you also then know that after that point, there's most likely a chance that it will rise up again. So you could say now when it's fallen again, you could argue to step in at that point and buy that stock because you know from historical data that the price will go up again. Then the last one is the fundamental analysis, and this I think ties both a bit together and is the most constant factor because in the end this is more about the overall health of a company and also how a stock is performing. Like, for example, if the balance sheet and the financial statement and the earnings report are year and year consistent, we could argue that the company is a very consistent base in to invest in and also a safe investment. But on the other hand, if we see in the financial data that it may grow to grow this year, we could argue that it will likely continue to grow further due to the money they spent in R&D, research and development. So in total, we can use these three analyses to uh, research a certain stock and also predict if it's going to be bullish and it will rise, or it will be bearish and it will fall. And we could say that the fundamental analysis is the base, like the consistency factor, but the sentiment and technical analysis can give us an edge in like predicting if it will rise or fall. And then we could also argue that they integrated nicely with each other. But what we all need to remember is to have a balanced approach. We cannot take one analysis and think it's all right. The best thing is, in my opinion, would be to combine always multiple analysis, a sentiment analysis and a technical analysis. If, for example, you see a recurring period, and it could be a safe bet to make that based on that historical data, it will rise again. But on the other hand, there's news coming to light that it's been catching in a scandal. Then you could argue that it's not the right time to invest in that stock because it will probably fall further. But on the other hand, if positive news arise, then we can argue that it maybe will rise sooner than maybe the historical trend predicted. Or, for example, the fundamental analysis and sentimental analysis. If the overall um, results of the company are overall stable, but the news caught them in a scandal, then still the numbers could say like, oh, right, still great, but maybe they will fall because of that. Or with positive news, the company will outperform their predictions, which could rise their price as a stock. And if you know that, you can make better informed decisions and make sure that your investment doesn't go to waste. And this was the end of this episode of um, Teach the Teacher about different types of analysis. I hope you learned something today, and I hope I will see you in the next episode. See you later.